it's true. Now, an instant audit on this. Fox Business contributor Charles Pate is here, as is James Frischling from New Oak, where he's the co-founder. You know, Jim, let me start with you on this issue of commercial real estate. As you see it, the Journal, runs down all the numbers involved here. Something that's already known to the markets, therefore priced in, the economy can absorb it, or the next financial crisis. What's the view?
I think the press is reporting it as the next financial crisis, the next shoe to drop, and in our opinion, it is being somewhat exaggerated. I'm not saying there aren't going to be losses in that space, and it's not going to be a challenged market, but the delinquencies, while up multiple times from their historical levels, is still a very low single digit. And with that in mind, I think these structures are built to withstand, again, a level of delinquency even higher than what we're pricing in today. The assets are trading as though there's going to be a far more draconian scenario being played out in the commercial space, but we're not seeing that in the actual results as of today.
We're seeing an interesting movement in REITs as well, Charles, with all these concerns about commercial real estate. I mean, REITs something a little bit different, but just if we look at what the story is as far as real estate, and you look at the reaction in the market, you see two different stories right now. So what do you make of it?
There's a disconnect for sure, and I think one of the reasons is because coming into the year, this was being hyped as like, the two next shoes to drop were commercial real estate and credit cards. And I think the further along we get and those shoes don't drop, the more, I don't want to say sanguine, but certainly the market isn't as concerned about it. And that might be the only thing that can make it a problem if we become so comfortable with the fact that, it didn't live up to the hype initially in the beginning of the year. It's not going to be a big deal. What I think a lot of these, I spoke to a big-time guy in a commercial space yesterday, and it's not the delinquencies so much as refinancings that they're worried about. And he's got incredible credit, but he was saying if his rates got to about 6%, that he would be in big trouble. And he spoke for a lot of the people there. So what you might have is another reason why a lot of people wonder, well, why would the Fed keep rates this low if things are so great? Because all we're reporting are green shoots and good news. Maybe it's these type of things that the Fed's trying to stave off, that we don't really understand the true dimensions or the risk that we're really facing. All
right, so real quick then, Jim, you see investment opportunities then if you think the market is essentially, as you said, mispriced? And at number two, what about the economy? Can the economy withstand it, even if it's overdone in terms of a concern?
On the investment side, we think some of the senior-most tranches of these CMBS transactions actually will prove to be very opportunistic and very good place
which are commercial mortgage-backed securities.
Correct. Now, on the loan side, these are mostly held by the banks, and the banks have every incentive to try to extend these as best as possible, to continue to lend where possible. And again, the accounting rules play to their favor to maintain these. Then you see some of the banks that come into trouble, and what's bringing them into trouble? It's always the commercial loans. So a little bit of a double-edged sword. The banks would like to maintain this as long as possible, but when the problems hit, it's that area of construction loans, and again, the commercial real estate loans as opposed to the securities.
Okay. Thanks, guys. Charles, Jim.
Charles Payne back with us, as well as James Frischling of New Oak Capital president and co-founder as well. And James, we got Charles's reaction when this news hit. What's your reaction to it?
I'm sorry, what?
About the deal, about Baker Hughes and BJ Services?
I mean, I'm encouraged to continue to see M&A and activity and investment. So we talked about a couple weeks ago, I was on and talked about some of the bank acquisitions. So again, when companies are willing to spend money, I think that's a positive sign, again, for some of the things going on in this market, including at least some level of stability.
Yeah. The market itself, though, Charles, doesn't look so hot this morning. What do you make of the start to the week after what happened in Asia overnight?
Not necessarily surprised. I mean, we have been taking our cue more overseas than normal. Normally we're the straw that stirs the drink. Particularly China has been sort of giving us our marching orders. Obviously, too, on the weeks that we have the jobs report on Friday, there's always that built-up anxiety, and I don't think this week will be any different. I would suspect, though, we trade in a pretty narrow range until Friday, unless any of the economic news we get before then is just extremely off the radar, off the mark.
Yeah, we forget we have that big jobs report on Friday also to look forward to as well. Charles, do you think there's any sector that maybe we need to pay more attention to that's maybe underlooked? We haven't talked about defense recently. We haven't talked a whole lot about materials. I mean, is there anything that you think is maybe off the radar that needs to be on it?
I would just say that there might be, to your point, some of these areas where you might start to see some buying. I think late last week we started to see just some buying more into, I mean, the Dow has underperformed NASDAQ tremendously. And then if you look at the stocks that have been hot recently, it's the stocks that to me reflect the rush by the individual investor, not necessarily the, the professional investor. I think we may see a more cautious tone to the market, so more blue chip type stocks sort of outperforming the market, at least going into September, where people are going to be pretty nervous, looking to either have some cash or to be in something that they consider quality.
Yeah, you mentioned, Jim, earlier this hour, maybe some opportunities in commercial real estate. We were talking about that story, but where else do you guys see a chance to make some money?
Well, with everyone talking about nervousness heading into September, I'm certainly, I guess, going to not try to fight that headwind and respect that there might be some money to take off the table. However, on any dips, I do think there's some legs to this rally, and in which case we are thinking in the home improvement space, for example, if people are going to start spending money, maybe doing it a Lowe's, a Home Depot, for example, could be interesting areas, again, on any kind of pullback.
All right, buying that does do it for us here at Fox Business Morning.